What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 9th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about how when we zoom out on our time frame, we can start to understand when Bitcoin may be setting up for a trend reversal without having to use a whole range of fancy technical indicators to do so. We can start to see it materializing in price, and it's why we've been emphasizing this point that no matter if we have another correction to come in the future, in the preceding weeks and months, why right now we should remain, at least in the short term, optimistic and wait for some form of relief rally in the market. So let's go ahead and kick things off here, guys. Now, I understand right now that there haven't been any significant moves in the market, and all the while, as we emphasized back the other day here when we're taking a look at this short-term range that we've been in for the past month, it is important not to jump to conclusions on where things are going to go next. In fact, if you guys are looking to build positions, or for that matter, take profits off of existing ones, we'd want to wait until we get a significant breakout in either direction. So if we get an actual breakout, a solidified daily close above this range, putting basically any potential shorts underwater and setting up a short squeeze event, then that might be a good entry point here, or at least for a short-term trade. And vice versa, if we were to decline through here, right, we may want to wait before we make a significant addition to our positions, right? And again, I wouldn't advise shorting, especially after this kind of downward decline. But again, doesn't mean that we're going to be recovering dramatically quick. Now today though, I want to go ahead and focus on the longer term time frame and explain a little bit as to why I believe we're going to be leaning more likely towards a breakout above this consolidation range. First off, it's important to understand here, just taking a look at the past, that every time we've come into this range, buyers have been accumulating. Someone out there, it's probably many people, but large-scale investors who have been sending in huge bids on the order book have come in each and every time to provide the necessary support at this range to meet the sell-side pressure. That's general support and resistance analysis. Now, it's not to say that this couldn't be broken, right? We don't want to take it completely out of the cards, but historically speaking, more likely than not, for more than a year and a half now, buyers have come in at this range. Now, that's an important thing to keep in mind here. And it's not to mention as well, not only just significant because of the history of how many times this has been retested and people have bought it, but considering the macro sell side volume from sellers coming in during these capitulation candles, the liquidation domino effect that can apply severe pressure on price, getting bought up each and every time. We take off our drawings here, you can see the wick in this case is very extended from the lows of each of these candles that revisit down into the upper $29,000 range to the low $30,000 range. So we can see it materializing in price here. But on top of that as well, over the past few weeks, we've seen something quite interesting. We first off have not seen any candles here on the weekly time frame come back to where they were on the week of May 9th, the capitulation candle we saw here, where we saw nearly a million Bitcoin traded on Binance, very similar to the capitulation candle we saw back in May of last year in 2021. But on top of that as well, we can also see here as volume has moderated here, we're not seeing on these weekly candles anywhere near the type of red sell side volume that we saw previously. So we're seeing a divergence there. And on top of that, price is starting to curve upward here. It's nothing too exciting just yet. Again, that's why I'm not saying that we're going to have an imminent massive breakout to new all-time highs or 50K or anything like that, but that we should probably wait, as it's more likely than not, that we're going to see some kind of rebound out of the channel here, some type of return to normalcy, regaining some of these previous losses. And it makes sense to expect this. The reason why? Well, we can take a look at historic price. What happened last time when price came into this territory? Well, both times, right, we not only came back up towards previous resistance here back in February, but on top of that as well here back in May, we came up back here towards $40,000. We retested it again and continued higher. Now we've got an opportunity here to test up into this $40,000 range here. This is really going to be the first key critical point of resistance. It's a big even level here, and it recoups a lot of the losses here from the past few weeks and the past few months, taking us back to generally kind of neutral territory from the start of the year. And that's probably what you would expect from one of these relief rallies. It's not as high as the significant relative high of $48,000 back here in March of 2022, which was a similar retest of the range back in December of 2021, but it is some type of relief rally. And it's not to say again that there can't be a correction after that, but what we're focusing on here is whether we're looking for additions for a short-term trade, or we're looking to basically de-risk or de-expose ourselves. We want to sell into strength. We do not want to sell into fear and capitulation, because it is more likely than not that when exchanges and other types of derivatives platforms are liquidating those leveraged longs and causing the domino effect, that price is overly exacerbated to the downside. And we are just simply hurting ourselves by selling at the worst possible opportunity, rather than taking a little less pain, waiting for some time to pass, and being able to sell at a better price. Right? And again, it doesn't matter what your position is on where the market is going long term. That's what we should be focusing on here, is making sure that if we want to de-risk or add into our positions, right, for a short-term trade opportunity, we should expect some type of upside around this range. Now, another way we can even look at this is in a similar way, is taking a look at the NASDAQ. We're taking a look at the triple Qs here, ETF tracking the NASDAQ index. And what I think is really interesting here, as you can see, as we were going downward here, we were having consistent monthly candles here, right? We're going up a little bit of a higher time frame here for equities, as crypto is a much more volatile and kind of short-term sector. If we take a look here at the monthly, right, we can see weakness within price here, right? A very thin, very thin candle here, tall wick on the bottom, very tall top on the wick, so showcasing a sign here the momentum is stalling. You also have here as well an inverse candle, right? And then you have the follow through here, and volume really starts to accelerate here, much higher than the buy side volume of traditional past few months. It's usually like that when we get sell side candles here, right? We tend to see an acceleration higher. We saw that back here in March of 2020. And we saw that here during the correction in 2018. But what's really interesting here is that you can start to see how the trend is starting to change here within price, especially when you take a zoom out here towards these monthly timeframes. It becomes abundantly clear. Notice how in through traditional bottoms here in the market, we see a tall wick on the bottom. And on top of that as well, when you get certain types of price action like engulfing candles that eat up that previous month of losses, now all those shorts are again underwater, and again confidence has been regained within price, and that's what initiates the next trend. Now, we don't have an engulfing candle like this here, but what we do have is the first key step. We've got the first step here that basically left us for the month of May, which of course was a scary month. It did sit in our new relative lows, taking us back to where we were back in November of 2020. Most of those losses being recouped here, and pretty much putting us at a neutral position, just about minus 1.59%. You can see it here in the top part of the screen. And we generally were pretty neutral for the month, and we're continuing to hold around this range. Now notice here again, all the while, the volume has accelerated here. We are seeing within market price a lower and lower divergence from the previous month, right? We're down 13.6%, down towards only 1.5% for the month. That is a sign here that all the while we're seeing an increase in volume, and it is technically still a bearish candle as price still declines slightly for the month, that there is a clear change in trend going on. This is typical Wyckoff methodology for understanding how candle patterns, as well as volume analysis and the volume spread against this price move, can be a signal of a trend reversal, that there is a difference between these two and what they're signaling. And that is generally going to be your telltale sign, especially on these longer term time frames or on the weekly time frame, that something is about to give. We can see here as well on the decline here, right? An acceleration downward in price here, but generally speaking, right, over time, the volume profile is now going below the average here, right? And we're not seeing on these red candles any significant sell side volume like we saw before. Again, showcasing here that we are likely going to be seeing a trend reversal of some sort. Now, one thing I wanted to kind of bring to your attention here is, again, taking a look at ETH BTC. I understand the altcoin market has been hit a little bit heavier than that of Bitcoin. But what is really interesting to see here, again, if we take a look at some of the major exchanges here, like the ETH to BTC ratio on Binance, right, we can see over time while it was heightened volume here to the sell side, we had our peak level of volume here on June 7th, but no significant change in price decline from, say, the previous day, or in fact, much lower than some of the significant sell side days here. This is, again, another key example here of the volume spread analysis here, where we're seeing a divergence from what price is showing us and what volume is showing us. It means that all the while this was a red candle here, a lot of this volume is probably a lot of bids getting filled in the order book, hoping to get an order at this price range. So you've got a lot of order book support here, a lot of institutional capital providing a support level here into market order flow as people are panic selling. And that's showcasing here that there is demand at these levels that is not going to allow for price to revisit lower until it gets filled. The more and more support here you have, right, the higher the supposed volume on the sell side candle and the slower in which price is declining, that is your sign here that we are oversold at these levels and that someone is buying. Someone is setting up the foundation so that price can start to move higher here, at least in the short term, right? Some kind of short-term trend reversal. And it makes sense here because this is the typical range, at least historically speaking, that buyers tend to come in here when it comes to the ETH to BTC ratio. We can see it here happening many times throughout this market, that generally throughout these corrections of around 25% to around 30%, this is where buyers tend to come in here. At least they've been doing so for the past year. Now, could we see some kind of breakdown afterwards? Sure. But more likely than not, you're going to get a retest at least of a lower high or lower significant high from the previous. And that's when potentially you could see some type of rejection downward. So in the immediate term, we don't want to be bearish here. Historically speaking, this is a period of time where the bulls are favored. And the same goes here for altcoin dominance. All the while, I'm not screaming to the roof to buy altcoins and bet long-term on the market. Again, if you're overexposed to alts right now, at least look to sell into some degree of strength, potentially a retest of this mid-range here at 55%. Don't sell into absolute fear and pandemonium. We have been around this range many times here in the past year in the sense of the declines we've seen in the market. And all the while, we might have lower lows here, all right? We're changing the trend direction. It is important to note to not get caught selling into the absolute bottom, waiting for some kind of strength here. Now, if you guys are in that position where you're looking to trade altcoins, and I know many of you out there possibly are using centralized exchanges, which can be great in many ways, but if you guys are also looking to make sure that you're getting a proper trade here in this case, and you're getting the best liquidity and market rate for your trade, sometimes when it comes to you trading your favorite altcoins, you've got to utilize a decentralized exchange. Now, all the while there are great providers out there like Uniswap, one of the key things that I always recommend people utilize is a decentralized exchange aggregator. And today's sponsor for the video is 1inch. If you guys haven't heard about 1inch, they are the largest decentralized finance aggregator for DEX volume. And what's really exciting to see here over the past few weeks, since the month of May and since we saw the capitulation from the whole Terra Luna situation, we've seen a heightened amount of volume coming through aggregators like 1inch. And this was really, really critical for a lot of people at the time, because during that capitulation candle and all the concern around Terra Luna, people were able to access much deeper liquidity by utilizing decentralized exchange aggregators like 1inch. And that is incredibly important when it comes to these types of events, to not deal with immense amounts of spread on very limited liquidity exchanges. With an aggregator, 1inch is plugging into all of the major ecosystems or decentralized exchanges within the DeFi space. They've processed over $55 billion of liquidity through various AMMs, so you're getting a very good quote on any of your given trades, and they've done over $210 billion in volume across a variety of AMMs such as Uniswap, Kyber, Balance, as well as Curve, all the names that you can think about. And the really cool thing is that all the while I like to use AMMs like Uniswap and all these providers. I think they've built great tools. The problem is that even if they have aggregation tools, they're usually only going to tap into their own protocol's liquidity, such as in the case of Uniswap, Uniswap v2 and v3. And while Uniswap has good liquidity, you're never going to get as good of a rate as 1inch when it comes to trying to find the deepest liquidity across all of the AMMs. And it can also help you as well to do aggregation across these different DEXs in the most gas efficient way. So through utilizing, for example, the 1inch network to trade $1 million of USDC to 550 Ethereum, we can see here that we're going to get the max return. If we are concerned about gas, we can also select that as well. But in our case, by accessing a variety of different pools, such as Curve and Uniswap, as well as a variety of other pools and pairs within the AMM space, we're able to get a rate that's going to save us $627 here. Now, of course, this will change over time depending on when people are actually plugging in the trade. But you can see at any given time, I'm going to be saving hundreds of dollars from trading through just one single AMM, right? If I'm actually going here and utilizing 1inch, it's going to be a much better outcome than just going to Uniswap or using the Curve protocol. And that's what I really love about 1inch. I've used it in the past. 1inch is a very clean, decentralized exchange aggregator. So if you guys are interested, feel free to check out the link down below in the description. Give it a spin. And on top of that as well, you're not going to be left in the dust here if you're used to using limit orders, or if you like the idea of doing peer-to-peer trades. You can set limit orders at specific rates and set expiration dates for it. So you don't just have to simply market order like you would through a protocol like Uniswap. So there's a lot of really interesting features here that I think 1inch has really stood the test of time on as being the leading decentralized exchange provider in the crypto space. But getting back to this topic here about kind of not getting too caught up in the fear in the market, right? If you guys are in altcoin positions or if you're in Bitcoin, the key thing here that I always like to bring up here again, all the while here, I know that I might beat it like a dead horse, is to make sure to not get caught 2 steps behind. We have been hanging in the 10 to 13 point range here of fear for the past month. And all the while, I know it can be painful. I understand it can be confusing. It can be disorienting. It's never fun to just be simply pushing sideways and not trending higher like during bull markets. We need to remain patient. We need to be vigilant because there's money on the line here. And as I've said before, if you guys are in a position where for your portfolio, you can't afford for price to go down a little even more, right? In that case, like you might get liquidated, or this is money that you just simply can't afford to lose, that you've made money that's life-changing, and you want to make sure you have it for the things that are really going to improve your life, like buying a home, funding your education, preparing for your child's future. Always make sure to take some off the table. If you're really, I always kind of say, if you're really sweating about the day-to-day moves in markets, and if you're worried about any of your given positions, it likely means that you're overexposed. Anything that you have in crypto should be money, in this case, that you're willing to some degree to understand that it could go down a significant portion. I don't say down to zero. I think that just gives it a bad rep. Most assets are not going to go down to zero in this case, especially if you buy quality ones. But if you're overexposed to alts, right, there's no problem taking a bit of chips already off the table. But if this is disposable income in this case, if it's money that you can afford to put at stake and risk, I would wait for some type of relief rally in the market. Historically speaking, it is going to be in your favor more likely than not. When the market is this overtly bearish, this overtly short, usually there is some kind of trend reversal, especially after a heavy correction and sideways consolidation. That's your telltale sign to hold out and wait for greener pastures. Plain and simple. It's not hopium. It's not any term you want to toss at it. It's the reality. It's data. It's what's shown time and time again in this market when people get too confident in one direction. And that also goes for the bulls, right? It happened back in April and May of 2021. Bulls were too confident. Dogecoin was taking over the world and headlines, and vice versa. I remember back in May of last year going through the same correction, and people think, oh my God, 20K inbound. I remember people constantly talking about it, then it went all the way to 65K. All right, we have to follow what the buyers are doing here. What are the candles showing us here? If people wanted to sell out of the market, they probably would have done it back in May. Those future sellers, those who are really going to put a weight on price, will likely only come during a relief rally. Plain and simple. And we can see it here within the volume profile. So that's it for today's video, guys. I rambled on a good amount. Hope you guys are having a fantastic day wherever you are. If you like this video, drop a like. It's a great way to support the channel. Check out 1inch down below in the description if you need to get the best aggregated rate for trading any altcoins in this market. If you're looking to rebalance your portfolio, maybe diversify into some other plays, etc. That being said, everyone, have a wonderful rest of your day, and I'll see you all in the next video. Take care, everyone.